8:30,
I know who he was.
and like to call the meeting to order. Good morning, everyone.
Good morning.
This is allergies, so I just want to go ahead and let everybody
Plenty of that going
know
on,
that.
too.
Angie,
All right, before we have our roll call, just a minor adjustment in the agenda. Tom Shanley and Brian Birnbach are going to move up to just before old business on the agenda. So we'll roll with everything in that order if there are no objections. And now we'll have roll call.
do you have it, Angie? Okay, let's come back to that if we could.
All right. The minutes were sent out, and if you've hopefully you've had a chance to review them. Entertain a motion to approve them, or if there are any edits, please present them at this time.
So moved as written.
Seconded?
All right. All in favor?
Aye.
Aye. All right. Motion carries. All right. Ms. Gooden?
Good morning.
Good morning.
You'll see for the applications, we don't have any applications for the Portsmouth retirement system or the fire and police retirement system. You'll see we had 5 reported deaths. And for active participation as of March 4th for both the Portsmouth retirement system and the fire and police retirement system, they're both at 14.
All right. Well, thank you.
You're welcome.
Well, that went rather quickly. Are we ready with
Are we ready
John
with Brian
Hancock?
yet, Angie?
You probably need to do your roll call first.
Well, she didn't bring it.
But it's okay, but everybody's
Okay,
names.
I'll do the roll call.
All right, thank you.
Mr. Gardner? No. Mr. Moore? Mr. Munson?
Here?
Mr. Holly?
Here.
Ms. Bellin?
Present.
And Mr. Hawkins?
Here?
And Mr. Covey?
Here.
All right.
You have to keep going.
So that means,
You gotta keep going.
excuse me, Mr. Glover.
You have to do Mr. Ashby. You have to keep going.
Okay, Mr. Ashby?
Morgan Stanley audio conferencing system.
Mr. Challenger?
Present.
Ms. Gooden?
Present.
And all right. 1, 2, 3, 4, 5, 6. We should have a quorum.
We have a quorum. Thank you.
To the Morgan Stanley audio conferencing system.
All right, while we're waiting, do we want to continue, Patty, with the...
Yes, we can.
All right.
I will point out that before we get started, there is a handout in your package that I think Mr. Birnbaum will go over regarding the returns and status that will get everybody's attention. But while we're waiting for the connection, I'll go over the cash flows, which is the worksheet that, if you will look under January 1st through January 31st, 2020, you'll see that the balance at the end of the month is $221,317,383.75. You'll see the employer contributions going in of $2.6 million, as well as benefits going out of $2,487,000. And we can keep going too while we're waiting.
Okay.
Okay, the OPEB trust, the account statement from Co-America Bank is included in your package, and the balance market value at the end of January was $4,458,369.49. And I included some additional material that I had not in the past with this.
Welcome to the Morgan Stanley.
That they put out quarterly a little status. Their investment services manager gives a little recap, and I included the one received a couple weeks ago.
Where's that, Patty? This,
It's a letter, VML VACO.
okay, that right here?
Yeah.
Okay.
And I thought it was a nice recap for you all to refer to. And I will call your attention on page 2 of that letter. Investment portfolio in total has $1 billion, of which Portsmouth is 404 million and so of that. So it's quite a large portfolio, a lot of economies of scale in terms of the management of that amount of money. So it's very helpful to Portsmouth not to have to do that separately. It does a recap on page 3 of the fund returns against their benchmarks. So the fund is doing well. There's also a lot of material. I'm not giving you all the material. I did email out all the material, but in your package, I'm just giving you summary information of Portfolio 1 and 2, and it'll see the asset allocations between the equities, fixed income, real assets, and so forth, and cash, and a little bit of the benchmarking. So that's just for your information. You know, if you need a lot more detail, it's there.
And you have Tom. I need to go
I was looking at the benchmarking.
with,
Any questions?
Okay, let's get Tom. Yeah.
All right,
Okay, Tom, we're ready. Thank
We're going to go ahead with Tom,
all right.
and his handout is, I think, at the back.
That's this book.
Don Hancock.
Good morning, Tom.
Hi, good morning. How are you?
Good, thank you. Thanks for joining us.
Happy to be here. Wish I could be there in person, but unfortunately not able to travel as of right now, as I'm sure you can understand.
We do. We have the book that you sent.
Okay. Well, thank you. I will try to be brief since I'm not there in person. You know, and originally I was scheduled to attend in February, and unfortunately couldn't at that point either. But you know, I just wanted to spend a few minutes to provide the board an update with regards to the program and our service and structure, similar to what I've done the last couple of years. I know most of you all have been involved for a few years and are familiar with us, but new members come on board and just want to make sure that there's a comfort level there. So I'll try to balance that as I work through this pretty quickly. Let me just say one thing first, too, before I touch on some of the material in the book. You know, obviously, with the events that are going on right now with the markets, and uncertainty with a bunch of individuals. Our call center has certainly seen significant inflows of calls. You know, from a pension standpoint, obviously, for the most part, the concern is a little bit mitigated when individuals call in, since individuals are not directing their own investments somewhere on the DC side. So, our call center is fully trained on all the products that we service, as well as market volatility, and really they're just confirming for individuals with pension accounts that, their pension account is safe, their benefit is locked in, and all should continue as forward. So just wanted to pass that along. With regards to the materials, if you all want to move to tab right inside first, actually, but prior to tab 1, page 4 and 5, I just wanted to list out, we enjoy the partnership with the city and the board. From year to year, we're happy to accomplish certain projects and initiatives, whether those are one-time events or ongoing administration of the program, and just feel it's important to document some of that work. I'm not going to go through all of this, but on page 4, you'll see on that multicolored chart, we did highlight some of the more significant items from the past year. With the system being frozen and only a handful of actives left, a lot of this focus, as you all know, is on the actuarial side and the work that Andre and his team does. So we highlight a couple of items there. of importance, I think the second item in providing analysis for the 4 scenarios on the impact to funding levels as a result of the pension obligation bond refinancing. So we did partner close with the city and Davenport last year to go through that process, and was very glad it ended up being a success for the city. And then we have this ongoing partnership with Greystone and Morgan Stanley to ensure that the administrative and the procedural work that's needed to go in alignment with the investment changes works smoothly. So the partnership and process there as well. And I think just most importantly, down at the bottom of that page, we did deliver over 12,000 retiree benefit payments. I mean, ultimately, that's the goal here of the program is to deliver benefits to former employees of the city. On page 5, we list out again just a handful of other accomplishments and work that was done throughout the year as well. So as we move forward behind tab 1, on page, it's page 8. Actually, I see a page number is missing, but just for a reminder to the group, as John Hancock in the U.S., we're also owned by a global parent called Manulife that's based out of Canada. And one of the primary focuses of our organization is on retirement plan services in different parts of the globe. So, you'll see we have a significant presence, obviously, here in the United States, in Canada as well, and then in parts of Asia where we work with corporations and individuals there. And, from a standpoint in the U.S., we are structured to support defined contribution programs, Taft-Hartley union programs, as well as defined benefit programs working with municipalities and government-run systems. Page 9 just kind of highlights at a high level really what our focus points are from an organizational standpoint. One item I'll point out in the dark blue box, it talks about our ambition to transform into a digital customer-centric market leader. How that trickles down and impacts you all and your program is that, we are continuing to look at how do we simplify and put as many transactions and procedures online or electronically based to support, that continued evolution there. Again, with your system itself, a vast majority of individuals have already applied for and started benefits. And we do currently support a lot of that process online or through our phone center. We're continuing to make progress to try to put that whole process there in conjunction to how the city wants to be involved. All right, so on pages 10 and 11, on 10, we just kind of lay out, some of the recognition that we've been fortunate to receive over the last couple of years, and we are proud of the work that we're able to do. I'll point out one item. There's the green box references Plan Sponsor. So Plan Sponsor is actually an industry-leading publication. They do a survey every year to all providers. We were fortunate enough last year in the space for providers and talking to partners with plans between 200 million and $1 billion to be recognized as a leader and best in class in that category. So, important for you all to know is that's the space that your program is in. On page 11, just highlights, and I've referenced this a little bit, some of the lines of business that we support. Again, for the city, you're squarely in the middle in the defined benefit program. But what I'll say is, we're what you would call a bundled provider, and we have the ability, using a single administrative platform, to support all lines of business, defined contribution, defined benefit, and non-qualified. So, we are set up and structured to provide services for all of those types of retirement programs. All right, as I move into tab 2 and just talk a little bit about our structure, any questions so far?
We're good.
Okay.
Oh, I'm in the wrong tab.
All right, so on page 14, this just a listing of the team that works on your program. You know, some of these folks you've met in person, some you haven't, but they're consistent and in place. You know, my role is to really manage the overall program, partner with you all, your benefits group, your finance group, and also, you know, with Brian, Jim, and the team at Morgan Stanley and Greystone, and make sure that, you know, we're providing everything that we need and everything's running smoothly. You know, the team that works on the city's program is listed there as well. Irene Burns, who's actually been out to the city, it's been a couple of years now, but she handles a lot of the day-to-day administration and ensures that, you know, from a procedural standpoint, everything is occurring as it should. Obviously, you all know, or most of you know, Andre Stewart, who is the actuary assigned to the plan and also manages our actuarial team. Chris Pila works closely with Andre internally on the actuarial side. And then we have a woman, Carol Wilhelm, when any communication needs come up, such as with supplements. She gets involved and handles that, and she knows the city and the way you like to communicate things. And then finally, Antoine Hajar works in our trust operations group, and we've assigned Antoine to work directly with Morgan Stanley to manage all the ongoing cash moves that are needed within the portfolio when needed. So just good for you guys to know that you do have dedicated resources assigned. Page 15, I won't get into too much. A lot of this gets into, you know, focus more on either active and open defined benefit plans or a defined contribution business where, you know, we're constantly looking at all aspects of a program to make sure we're bringing the right recommendations to you all. And I certainly will do that. It's just probably needed more in a limited capacity with the structure of your program. On page 16, this just starts, the next couple of pages just cover all of the administrative and actuarial work that we do. So, you know, we are a full service provider, meaning that, you know, we handle all the needs from an administrative perspective, all of the actuarial needs with our in-house actuarial team, and then everything that's needed to work with participants of the program and individuals that are receiving benefits or are set up to receive benefits. And then again, as I mentioned, we partner very closely with Greystone on the investment consulting side where they handle all the consulting and heavy lifting, and we just make sure from an operational standpoint it all works. So these couple of pages just talk a little bit about, you know, all of those different functions that we provide to your participants through that ongoing administration, the strength of the actuarial team that's in place on slide 17. You know, we have very tenured, very experienced actuarial staff members in-house. And again, as I mentioned, Andre Stewart, who's been involved with your program for a number of years, he also manages that group, and he's just a great resource, as hopefully many of you know. That's carried over on page 18, just kind of focusing a little bit more as to what exactly Andre and his team does. You know, outside of the valuation and helping with some of the financial reporting, he's also brought in on any specific projects, initiatives, or analysis as those needs come up. And, you know, as you know, even from last year, he's available and willing to come down not only to meet with you all, but to meet with council, to attend work sessions, you know, whatever's necessary to ensure, you know, we're supporting you in support of the program. And then, you know, page 19 and 20, again, we don't have to get too involved with a comprehensive communications program, but as needed, we will reach out and communicate to individuals who are receiving benefits or are yet to receive them. And, you know, the good thing is individuals do have access to a lot of information online that touches other areas of their financial lives, you know, if they're looking for resources for additional help. So, you know, there is insight into our all of our programs if individuals are looking to access that. And then on page 21, quickly covered, you know, participant services. This is our phone center. You know, first off, online access, obviously, they're 24/7. And then our phone center is open from 8 a.m. to 10 p.m. Eastern Time, Monday to Friday, to field any questions as they come in. And some of the things that are referenced on there, those generally are where we're seeing calls come in from the city. It's just if individuals need help with their payments, if they haven't received them, if they need to set them up, if they need to change something, how they're distributed, we handle and coordinate all of that. We're the resource for that as well. All right, so that
Tom?
covers kind of our service
Tom?
structure overview.
Tom?
Tom, we have a question.
Yeah, this is David Holly. How are you doing today?
Yeah, I'm doing well, David. How are you?
Fine, thank you. On page 19, is that 4 in-person meeting days available? Does that include retirees or potential retirees in the event that they have questions on how their retirement will be paid out and what process they need to go through?
Yeah, it does.
Is that in coordination with John Hancock and the city?
Well, this is John Hancock, yeah.
Huh?
Yeah, so what we offer are the potential for 4 group meeting days every year. I don't think we held any last year, but in previous years, we've definitely held them, come down partnered with the city for other events for retirees, or just made ourselves available for sessions to help answer questions around the things you just pointed out.
Okay, thank you.
Yeah, so we'll partner with the benefits team, and we can provide assistance as needed there. Thanks for asking that. I had skipped over that.
Thank you.
Certainly. All right, so in section 3, on page 24, just listing out really what the main focus points are, and obviously we'll build in and can modify as needed, but, meeting with the board, providing this type of annual overview, making sure that you're aware of any product or service changes that are forthcoming, data security overview, look to do that once a year, did that last fall. Ongoing, just looking at administrative efficiencies. Again, everything runs very well. We partner with Ms. Good and her team, and they do a great job there, so it makes it easy for us. And then, we look for internal efficiencies as well to try to improve upon what we're doing. In past years, we had taken the lead on some fiduciary training. Again, I know Mr. Challenger has taken over that role and does a great job there, and we're there as a resource if he wants to share any information through us, or if there's any assistance needed, we're more than happy to do that. And then the big thing from ongoing actuarial support, and then making sure we're, making the experience for your participants, former employees, and active individuals a successful one. On page 25, I know there's been a little bit of discussion around looking at month-end valuations, and we're going to do a better job to try to sync up with some of the other ongoing reporting, just to make sure, everything is matching up. I just want to point out that if in the past you had seen differences in values, they're primarily because of 2 things. One, as a reminder, there's a significant amount of the assets of this program that aren't held at John Hancock in our trust company. They're held at Morgan Stanley in the different types of managed accounts and alternative investments that Brian and his group are helping to oversee. Those assets, although they're valued ongoing there, we receive a monthly feed, an update for the total portfolio. So sometimes there are some timing issues as to when that comes over and who may be running reports and looking at the values there. So we'll just make sure we sync that up a little bit better. And then there's also there's a holding account where at the end of every month, cash is raised from the investments to be there to pay for the upcoming month's benefit payments. And from a trust reporting standpoint, those can get captured a little bit differently too. So we're going to make sure we match up, and we're reporting how the finance team is reporting to you all to avoid any confusion. So just wanted to give that overview there. And as you know, and I'm sure as Brian's going to talk about, the big concern and probably focus right now is just the volatility and the impact overall asset. All right, so from there, just the standard reporting that I look to provide on a quarterly basis. I won't get too involved into this because this information is as of 12/31, just with some of the delays in our meeting. But we do provide out, on pages 27 going forward, we take a look at participant status breakdown, cash flow, on pages 28, and then, a breakout of those handful of remaining active individuals, where they are from years of service, et cetera. We show that for fire and police, and then the supplemental system as well on the following pages. Any questions there? All right. So the final thing for me is just the quarterly disclosure in the last section, the value summary and revenue disclosure. So again, gone through this with the group, but on page 35, is a summary of the structure of expenses. And, just to let you know, this update is looking at using average assets for the fourth quarter. It then takes those and projects those forward to annualize, the projected expenses and revenue that may be involved with the program. And if you read this left to right on this blue chart on page 35, you see investment management. Those are the expenses from the investment managers that are overseeing each of the individual options that are in the plan. And then that's an asset-weighted total. We show that in both basis points and then the actual dollar amount. Again, this is projected on an annualized basis. Then you have Greystone consulting cost. Then you have our cost following that. And then you have revenue sharing offset, which, there is a fund, there is an investment in the program, the Lazard International Equity Concentrated Fund, that actually provides back some revenue to the plan to help offset expenses. So we show that credit there as a negative 1.39 basis points, but that's actually being applied to offset your expense to get to the total all-in expense in the last column there. So you see roughly 55 basis points. All right, and then the next, on those following pages, you see at each of the system level kind of how that works from investment to investment.
Tom, I had a question. I just wanted to confirm, when I'm looking at page 35, that the column entitled Investment Management includes the fund fees or not?
Yes, it does.
Okay, so this is an all-in cost. The fund fees, investment management, administrative management, everything.
That's correct. Absolutely.
Thank you.
Yep. And that the investment management, if you look at pages 36, 37,
I see
you'll
it.
see in the top section, the top box there, it lists out each of the investments held separately at John Hancock, and then we collectively show what you'll see, the Morgan Stanley Advisory Holdings. That's a collection of a multitude of different investment options that are being managed in those separate accounts. But we show next to it where you see expense ratio, that's the investment expense of each of those holdings. And that gets you to that overall weighted expense that was reflected on the prior page.
Right, yeah. Very good.
All right.
Thank you.
Thank you.
All right. Thank you all, and please let me know if there's any other questions as you move forward here.
All right, thank you, Tom. I appreciate you calling in. Brian, are you there?
I apologize. I have to recall.
Okay.
Would this be a time for me to ask a question?
Sure. Always appropriate.
You talked about the 4 possible meetings. Are they scheduled, or how are participants for people to have ask questions? Or
Brian?
Just check into it.
Good morning, Brian. It's
I'll
Angela.
answer.
We have you inside the meeting right now.
Okay, great.
Thank you. Go ahead.
Okay, great. Good morning, everyone, and sorry I can't be there in person, but happy to chat with you on the phone, but wish it was sort of under better circumstances here. Happy to talk about what's going on in the capital markets and the impact it's had on our portfolio. I sent Angela yesterday just a quick 2-page summary of the major capital market returns for January, February, and then the first 10 days of March. But understand that March 10th was a strong update in the markets, and so it doesn't include what happened yesterday, nor does it include how the markets are going to open this morning, which is what I might characterize as another character builder. But if I start on just that first page, which shows the major capital market returns, I think when we were together.
Is this the, tell us again which page you're on? Is this the one that says
have the correct-
preliminary Portsmouth returns?
I'm going to come to that next, Laura, but the title of the page I'm going to speak from right now is called Capital Market Return Summary.
Okay,
only
the other,
have
yeah,
on the
it's
back.
It's on the back.
It is not on the back.
Yes, not on the back of it.
It's on the back of mine. Capital market return summary? Okay. All right, go ahead, Brian.
Does everybody have that?
I have it. Why don't you go make copies?
Okay. So the year, believe it or not, actually started off pretty strongly. In fact, the first roughly 3 weeks of January, we saw a continuation of the momentum in the markets that characterized the end of 2019. And just kind of to refresh everybody's memory, all the way on the far right-hand side of this table here, I show the results for calendar year 2019. And on the S&P 500, you'll see we were up about 31.5%. And then going down the list, other U.S. and global equity markets were up anywhere from, just call it 20% to 25%. So 2019 was a very strong year in the global equity markets and in the U.S. equity market in particular. And the fourth quarter of 2019 was particularly strong. The S&P was up over 9% in the fourth quarter of 2019 alone. So that momentum continued into the early part of 2020, where we saw markets continue to grind higher. In fact, the news stories were about the U.S. equity markets continuing to reach new all-time highs. Now, all of that changed in late January. Let's call it middle to late January, and when it became known and we became aware of this virus that was starting to make its way through a single city in China. And by the way, but before any of this stuff had ever happened, I wasn't even familiar with a city called Wuhan, China, though the city itself is one of the largest cities in the world with a population of over 10 million people. So nobody really understood what it was. Nobody understood what the impact was. It was in, China, which was this far-off place. Nothing for us to worry about in the rest of the world or certainly the developed world. And you can see as you look at the January and February returns, the epicenter, the where it started was in China, and you can see emerging markets had some fairly negative returns in January. We were down about 5%, whereas the S&P 500, for example, was flat in January. So it wasn't something that anybody paid. We were paying attention to it. The market was paying attention to it, but certainly the impact that it potentially had and it spread around the world wasn't fully appreciated. That then started to change, and maybe before I get to that, sort of the response in China to this virus was basically to shut this city of 10 million people down. So the whole city itself was effectively quarantined. The government in China limited travel to other cities in mainland China and outside of China. Travel curbs from other countries were put on travelers from both mainland China and some of the Chinese islands as well. So the hope and thought was, maybe this thing could be contained. But the reality is it hasn't been contained, and it started to spread to places like Australia and Korea and Italy now being sort of the epicenter of what's going on in Europe, and it's made its way onshore to the United States. And so that's why, and that really started in February, and that's why you see some pretty significant declines in February for the S&P 500. We were down 8% or so. The MSCI EFA index was down 9%, so that's an index of developed market countries, think Japan, Europe, Australia. As new cases were being reported of the virus in other parts of the world other than China is when sort of equity markets started to sell off. Where we're at today is China actually has, if you take the headlines at face value, and I get that's a big if, because you always got to take information that's coming out of China with a little bit of grain of salt, but if you take the news coming from China at face value, they seem to have gotten their arms around sort of new cases and the spreading of the virus. There are new cases being reported, but the rate at which new cases are being reported are down dramatically from what it was, say, January. The opposite is true in the developed world and in the United States, Italy, Germany, Korea seems to have gotten a little bit of a handle on the outbreak that they're experiencing, but we haven't gotten our arms around sort of the spread of the virus in this country and then in Europe. So that is what's sort of that's what dragged the market down in February, which was the having it come on shore here. And it's what's driving the market here in the early part of March, where we continue to say that there's volatility in the markets is an understatement. We're down 1,000 points every day on the Dow. We're going down in 5% chunks overnight. The futures market is what's called limit down, so it goes down a certain amount and then they stop trading. That's how the market's open, and that's what we're dealing with today. On top of that, we sort of have a double whammy of now a massive decline in the price of oil. And in general, low oil prices is good for us as consumers because it means lower prices for gas that we pay at the pump. That means there's more money in our pockets to go spend and buy stuff or save or whatever it is that we do with our money, and so we generally like to see low oil prices. I think what's going on now, though, is putting an entire industry at risk in terms of potential bankruptcy, certainly for the smaller companies and those that have less healthy balance sheets, and the impact of that is likely to be layoffs and wage growth that sort of stagnates. All of those things are sort of bad for the overall economy. So you take this evolution and the spread of this virus, you add on top of it a complete collapse in the price of oil, and now we've sort of got this perfect storm where when we talked about our outlook for 2020, even a couple of months ago, we weren't forecasting at all a recession for this year. But where we are today is arguably we're already in the midst of a recession. We obviously won't know until the economic numbers get reported, but schools are closing, businesses are encouraging their people to work from home, people are not out, they're not spending money. Everybody is concerned because we don't know how this situation is ultimately going to play out. So all of that to say is at this point in where we're at, even though we've had, in the case of the page I show you here, 10%, 11% declines for the S&P, almost 20% for the Russell 2000 index, small cap stocks there, emerging markets down 13%. You add what happened yesterday and what's likely to happen today, we're down on the S&P probably 15 or somewhere between 15 or 20% for 2020, and we're not even through the first quarter yet. So all of this is to say that there's a lot of risk in the market. We're thinking about it. The uncertainty is causing a lot of sort of consternation. But we haven't sort of made any changes to the portfolio yet. I will say that we are getting together as a group after this call to talk about what changes here and across all of our other clients we may potentially be making. I would say in general, when we have periods where we experience, let's just use round numbers here, 20% declines as quickly as we had, we're much more likely to be buyers of equities than we are sellers. But I think there is so much uncertainty in the market that maybe that sort of approach that we've taken historically isn't the right approach here. And so I don't want to say that any changes to the portfolio are imminent, but know that we're going to get together later today to figure out what we want to do in light of kind of all the things that are going on. I don't want to leave you with the impression, though, that it's sort of all bad, because if you pay attention to the news media, you read the newspapers, you turn the TV on, everything they talk about is bad. I mean, yesterday we've had sporting events that are canceled. The NBA suspended the rest of its regular season. You have college basketball games that are going to be played now in front of empty stadiums. So there's a lot of bad stuff going on, but one of the positive things that we see, and that's giving us a little bit of maybe sort of positive support here, is the fact that this whole thing started in China, and lately they've gotten a control on things, and in fact the Chinese equity market is outperforming the rest of the world, and it's outperforming relatively dramatically. So I don't know that we're going to sort of hang our hat on that, but again, if you take all the news and the information coming out of China at face value, the fact that their Chinese equity market is outperforming the rest of the world is somewhat encouraging. And so I'm not going to say that we've seen the worst that we're going to see here in the U.S., because things can, in fact, get worse. But if it really is this starting in China, moving to the rest of the world, the fact that the area where it started is now, doing better than the rest of the world, perhaps means that we're closer to the bottom than maybe you would think if you simply watch the media reports. So I don't know if there's any specific questions about that, maybe before we get into the results of our portfolio, but given everything that's going on, I thought it was really important that we I at least dial in here to make sure that we're all sort of understanding where we are, how we got here, and then, I may have some other things to tell you about the things that we've done to the portfolio to either take advantage of opportunities or to rein in risk.
Brian David Holly, how are you this morning?
I've been better, David. I hope you are well.
I'm seeing daylight anyway.
Yeah.
Couple questions on what you just said. This is indeed long-term investing, and the effect, as you well know, will have the first earning reports won't be pretty, but it's still more of a fear factor than it is a financial factor in my mind anyway at this time. You mentioned that you're going to be meeting with your folks after this meeting. If anything significantly changes, would you let us know via email or whatever?
I will.
Whatever you need to do.
And David, let me just comment on some of the things you said, and we absolutely agree that this is long-term money. We don't need to be overly concerned about short-term volatility. And we absolutely agree with you that what we're going through right now is not a financial crisis. It is more around, I think what's happening in the market is related to uncertainty, and the uncertainty around how this thing evolves. Are we going to get our arms around this thing to stop the spread? And the reality is in places like China, they can do things to stop the spread that the rest of the world can't really do. I mean, we've got, in this country in particular, everybody has rights, and we can't really tell people what to do and what not to do. So I think the reality is they had more tools that they were willing to implement to get their arms around it. And the sort of the policy response, and this really isn't a political knock by any means, but it's sort of added to the uncertainty. I think the policy response to what's happening has been pretty muted. And I think what is happening required a much stronger response than we're getting. I think the impact, and we think at this point, the impact to the overall economy is going to be temporary, it's going to be transitory, and at some point, we'll get back to a resumption of sort of business as usual, economic growth as usual, that sort of thing. The question is, does that happen next month? Does that happen in June? Does it happen next year?
Right.
And that's sort of the uncertainty that we don't really know.
Right.
I do think what would help, and it seems like we're maybe a bit further away from this than what the market may have thought earlier on this week, was a sort of a fiscal stimulus package, and whether that means a payroll tax holiday or whatever form it takes, could help the economy sort of stabilize here. But, with anything in Washington, nothing ever comes easy.
Right.
So
My impression would be that's probably the direction that we will probably go in.
I think that's the direction we'll go in, and the question becomes how quickly we can get there.
Yeah.
And that sort of remains to be seen. So I would say keep an eye on that singular issue as being sort of critically important, at least to stabilize the equity markets and to sort of give us some time to deal with the spread of the virus. So anyways, that's a long-winded way of saying I agree with everything you said.
Yep. I appreciate it. Have fun today.
Yeah. Yeah, thanks. Anybody else have any questions about that? Otherwise, we can talk about our results here. Okay. So if you flip the page and go to the preliminary Portsmouth returns, so here's where we're at now. I'll caveat this a number of different ways, but starting by saying we're only looking at the public markets part of the portfolio. Keep in mind we've got about 3% or so in real estate. We've got about 5% of our portfolio in hedge funds, and since those investments don't report results on a daily basis, we can't really sort of capture those returns. But the hope would be that, you know, if stocks are down, in this case, I don't know, let's just call it 10% as of a couple of days ago, bonds are up, I don't know, about 5%. It would be our expectation that our real estate and hedge funds is going to fall somewhere in between there. So I don't know if that's 0, I don't know if it's -2, but they should go down less than what the equity part of the portfolio is going down. And then the other thing I would say is that these are preliminary, so these are not sort of audited or final returns, so keep that with a grain of salt as well. So we're down a little less than 8.5% for the year. I'm sorry, a little more than 8.5% for the year, down 8.7. That's right in line with the benchmark. I showed 2019 again just to show that, you know, the results that we earned in 2019 were significant, and the declines that we've experienced in the early part of 2020 have not undone 2019. So I think that's important to keep 2020 into a little bit of perspective, that it's on top of an incredibly strong 2019. So you add the two, you know, 2020 and 2019 together, we're still sort of well ahead of the game. Now, in the year-to-date period through a couple of days ago, our return is right in line with the benchmark. If you go down to the various active managers, you can see by and large, the active managers went down less than the overall market or their benchmarks, and that's sort of a conscious decision on how we structured the portfolio. We tend to favor active managers, and the investment committee in Landon and David will recall when we got together a couple of months ago when we talked about risk. It was, you know, sort of putting the portfolio together and having managers that do better on the downside and maybe not as well on the upside. And that's certainly what we've experienced in the early part of 2020. In fact, if you go, I don't know, 2/3 of the way down that page, and I know we talked about this when we talked about 2019 results, but our emerging market manager, again, you know, China being the epicenter of how this thing got started, the Artisan Developing World Fund was basically flat for the year, and emerging markets in general were down over 13%. So we've got managers that have done well, and we have some managers that have done significantly well and better than in protecting capital in these drawdowns. The last couple of rows there are our fixed income managers. So fixed income returns continue to do pretty well in this environment because investors tend to flock to things like treasury bonds when equity markets are weak. You can see BlackRock is up a little less than the benchmark, about 4.3%. And then this Lord Abbett short duration fund. So it's a little bit, it's a shorter duration portfolio than the overall market, which is why it doesn't have as strong of a return. And this is a portfolio that has an overweight to credit and corporate bonds. Those bonds, with the exception of the last, I don't know, I'd say week to 10 days, held up really well in the sell-off in the equity markets. But with the collapse in the price of oil, the corporate bond market has started to see some declines in returns, negative returns over the last week to 10 days or so. So that's kind of what's dragging that down. But our bonds in general, you know, continue to do well and protect capital with the equity markets in the sell-off that they're currently in. So we're down about 8.7. Again, this is 2 days ago. We're going to be down more when we take into account today and yesterday. But I would expect we're continuing to probably at least track or hopefully do a little bit better than what the benchmark is doing, given that we have some active managers that protect on the downside. The reason why we didn't outperform on this page here at the total fund level, even though we have a bunch of active managers that outperformed, was really twofold. One is we have an overweight to value stocks, and I'll just show you. This is the easiest way to sort of illustrate that. The first two active managers, Poland Capital, you'll see they are a large cap growth manager of ours. They were down 5%. Their benchmark was down 5.7%. So again, a little bit of capital protected. The next manager, Aristotle, is a value manager. So you can see those kinds of stocks were down significantly more than growth stocks. So we have a little bit of an overweight to those value stocks. Even though we have a manager that did better than the market, that overweight to value stocks hurt us. So that's why we haven't outperformed the benchmark at the total fund level, even though we have managers that did well. And then the last thing I would say about sort of matching the benchmark and not outperforming was what I talked about with that Lord Abbett short duration fund. We have a short duration strategies do well when interest rates rise. And with the collapse in equity prices, longer duration bonds did better than shorter duration bonds. And again, we got that overweight in credit in that portfolio as well. So benchmark returns, we've got managers that are doing their jobs. We're going to reevaluate everything today. We'll certainly let you know what changes, if any, we intend to make. But again, I would just put 2020 into some context of the returns that we experienced in 2019. 2019 was such a good year. We haven't undone that, at least as of this reporting date yet. Again, we'll continue to evaluate to see if we need to change course here. But I'm happy to answer any other questions you may have.
Without knowing, this is Laura, Brian, without knowing what the stimulus package might be, how is that going to impact meeting today when you don't have those details?
That's a good question. I think the expectation will be that something will get done. And there will need to be some more sort of political posturing along the way before something gets agreed to. In fact, when I woke up this morning, I had the TV on, and somebody made the comment, and I had sort of forgotten about this, but back in the global financial crisis, there was something called the Troubled Asset, I forget what the acronym is,
TARP,
but the TARP program, where governments came in and helped banks clean up their balance sheets. And the first TARP package was shot down by Congress. And so this is a reality of sort of the political environment in which we operate. This is how our country operates. Ultimately, something will be decided upon that will help stabilize things. But until we get to that point, I think you're likely to see some volatility and potentially additional downside here. So the expectation is at some point something will get done. It'll help. The question is just how quickly we get there. So what we'll likely talk about today is, what's the risk to the downside here, knowing that look, we're in the midst of a 20% decline, and in sort of normal situations, we would want to be a buyer here. But maybe this is a situation where we want to take a little bit of risk off before we put more risk on. And so those are the conversations that we're likely to have. But I think the expectation of not only us, but of everybody is that ultimately something will get done in Washington, and that'll help to stabilize things.
All right, thank you. Any other questions for Brian?
Thank you, Brian.
Thank you, and we'll keep you posted. And please, if anybody has any questions or any comments, feel free to reach out to me directly, and I'm happy to chat. So I wish you all the best, and look forward to seeing you soon.
Yeah. All right, tough day.
Thank you. Bye-bye.
Bye now. Well, a question about something other than the market would be good right now. Joe.
Yeah, Joel, Chairwoman, Joel had a question. Could you restate your question, Joel, that you had?
He spoke about the 4 possible times where they're available to answer questions and have educational type meetings with participants.
Yes.
Are they scheduled, or how does that work?
What we do, we have scheduled, we haven't done any for 2020. I think the last time we did some was probably early of 2019. Some of the ones we did in 2019, they were not well attended. Typically, a lot of our participants, they really want more one-on-one assistance, wanting to sit down with staff, so we have done that. The other things we've done for participants, let's see, we're 2020, this might have been in 2018, I think. We had a request, and I think it was for participants of the Portsmouth retirement system. They wanted us to do a little informational session as it related to life insurance, just kind of them wanting to make sure they had their ducks in a row, to know who to contact. So myself and a member of the human resources team, we scheduled a meeting in social services in one of their community rooms, and we did a little informal session, something of that nature. But if that's something that the board would like for us to do, just let us know, and we'll coordinate it.
Ms. Gooden, do you have the staff if people want to do a one-on-one? Because a lot of these folks at that point are senior and don't have a good grasp on paperwork and everything. Do you have the staff where you could set up one-on-one appointments?
Yes, we could do that. Our preference would
So all they need to do is just call?
Just call. Its preference is to schedule appointments so we can make sure we have dedicated people there. We do sometimes have people who pop up, and if they do pop up, we will accommodate them. But we prefer just have an appointment so we can, make sure we have everything
Well,
that we
I
need.
understand. I don't
Yes.
disagree with that.
Yes. But sometimes they don't. So let me say this to you. One time we had a young lady, she flew in, she was out of the country, and she just popped up. So stuff like that. What I'm trying to say is that I'm not speaking very eloquently this morning. We will not turn someone away, if that makes sense to you. If you show up now and you need something, somebody's going to assist you.
Good to hear. Thank
I
you.
can see the one-on-ones because people are shy about talking about their finances.
Yeah, they don't want to talk
They
out.
don't want it in an open meeting, so.
They don't want
And
to
evidently, there's a
understand.
lot of paperwork. I have no idea.
It is. It's a lot
It
of.
goes back and forth to 2 or 3 different spots or something.
Yeah, lots of times what they want assistance with is really the paperwork. So usually what we'll do is a member of the human resources team, they'll fill it out for them, lots of times, fill them out, let them look at it, make sure they verify it and sign it.
Right.
And take care of that. Usually what we'll do, we have mailed off paperwork on their behalf. One of the things that I just insist on is always making sure you give that member a copy of that paperwork too. So we usually give them a copy. We'll keep a copy in their retirement file and we'll process it. We understand, as I tell people, when I get older, I want somebody here to take care of me and help me or help my son in the event that I pass
I
away.
can say as an active city employee, we get great results from HR because every time we ask, they set up.
Well, you got another 50 or 60 years before you get
please.
older.
Oh,
don't
you're
you?
being too kind this morning. I don't know about that.
Politics aside, if there are no other questions,
Question.
yes.
And maybe it's for our audience too. What is our percentage of funding for the retirement system currently?
Let me say, the last actuarial study was done last July. Since then, the city has put in an extra amount of money. So what I'm about to say is an estimate. It's not been verified. So somewhere in the a little above 70%. So, and remember, just let me take a second to explain how that is calculated. You heard that we have $220 million cash. The requirement by the Governmental Accounting Standards Board is you estimate the life of everybody who's participating, including those people who are currently working, and what their benefits will be over their life, and you bring it back to today's money, and I'm oversimplifying, and then compare to your assets, and there's your shortfall. You know, and along the way, the city continues to put in between the two plans roughly $10 million a year. So from a cash flow, I don't anticipate there to be the issues. It doesn't have to be 100% to have a good feeling. I think years back it was much, much lower, and that was an area of concern, and that's why the additional debt was issued to kind of shore that up. So there will be an updated actuarial study done this summer, and we'll have a better handle on precisely where we are. And of course, if the markets stay down, that funded ratio is likely to drop.
I know that it was quite a bit lower in years past.
Yeah.
And knowing that it's budget structuring time currently, is that an item that will be discussed before the budget is finalized?
Well, they have budgeted the roughly $10 million. Again, that is included or will be included in the proposed budget that will be presented very soon. So the city is still making its monetary contributions.
Okay, thank you.
All right.
Thank you. Mr. Challenger.
In light of the other discussions, I'm gonna make mine very brief, maybe a minute. I went to the Napa conference in Tempe, Arizona in February. The grouping or sessions of the classes that they had were on 4 different topics: benefits, investments, fiduciary, and plan governance and tax session. I only want to talk about one thing. There was a board education policy that would discuss that certain jurisdictions were using. And in their policy for board education policy, they had 3 different components. The main one was an orientation program, and it so happened that in January, Captain Hawkins, we did our first orientation for the retirement board for a new member. And that's something I think we should continue going forward. And in that course of about an hour, it maybe even less than that, we went over the history and organization of the Portsmouth retirement system, the bylaws, board policies, obviously in a condensed form. The other thing that the board education policy talks about is a mentorship program. So if you have a new member and the new member wants mentorship, that they have one person on the board that's assigned to assist them with exactly what is going on with the board, if they have any questions, that type of thing. So that's generally the essence of the board education policy. And the other part of it is, obviously, generally when I go to these conferences, I have a report back to the board, is whether going forward, whether there's any type of specific type of training program that we would like to have for those sessions, whether that's about corporate governance, actuarial basis, investment basis, benefit administration, procurement, Freedom of Information Act, those type of areas that the board encompasses, whether we can frame it into one particular area as opposed to more of a general corporate governance discussion that we did last year. So in light of the investment reality, I think that's about a good overview for the Napa conference. Unless you might have any questions.
Any questions? No.
No, I was going to say that's a wonderful idea. Finance would be the one to hit this year. 3 years from now, 4 years from now, when we get ready to relet the contracts, procurement would be the good one to tackle that year before we get into putting together the statements of work.
Okay.
I would like to say that was very helpful. I was fairly ignorant of what happens in here, and it's part of the reason I filled out the application was it's my retirement. I ought to know what's going on, and that was very helpful, that half hour, 45 minutes we spent.
We on the board, we get a lot of calls from our coworkers asking us questions. They're expecting us to be up to speed.
Well, there's one addition to the agenda. Patty has an announcement.
Well,
Ms. Phillips, sorry.
no. Well, I think last month we promised OPEB information. And,
Okay.
I'll cover that, and then I'll do the little announcement.
Okay.
The governmental, and for, not everybody's familiar, so I'm not going to use the word GASB, but GASB is a term used often in the finance world, but Governmental Accounting Standards Boards determines what you disclose in the city's financial statements and in its notes to its financial statements. And a couple of years ago, they added other post-employment benefits, OPEB, OPEB. Retiree health care is one of the largest, most significant post-employment benefit. And so there is a whole calculation. You'll see GASB 74 and 75 disclosure. And for those of you all who need help sleeping at night, you can read all of it. But I will point out on page 14, the net OPEB liability at June 30, 2019 is $19,265,258. And just like I described on your pension, it's the same principle. They calculate the value of this future liability to be paid over the next 20, 30 years at $23 million and change. Compare that against the assets you have, and there's your net pension. And that actually shows, there's financial statements called entity-wide that has all that, you know, the pension liabilities, a lot of the retiree health care, and other things. And I'm not going to go into the deferred inflows and outflows, because you'll notice that the data that they use to base this on is a year old. So then you have to do some adjustments on the balance sheet for the things that happened during 2019. But I thought you would, I think Mr. Moore actually specifically asked for this, and that is the number. And we have this updated every year right now.
Thank you.
And so regarding the announcement, I'm pleased to announce that the new permanent CFO will be on board on Monday. Her name is Ms. Mimi Terry. She had previously been with the city of Portsmouth earlier in her career, and then had moved, I think, to Suffolk, and then she's most recently been in Richmond as assistant director. So she's got a great background, and I know that she will do a good job for y'all.
And you're happy?
Well, I'm happy that they found someone who will be permanent, yeah.
You've done a great job.
Well, thank you
Thank
for your service. We appreciate you.
I was just telling Ms. Bellin earlier that the big issue that I'm trying to do is wrap up the annual report, the CAFR, which was due actually last December, and we're praying that we can get it done by tomorrow. So it's been
Well, if I may add, I've had the opportunity to sit in a number of meetings with you, with the investment committee too, and I'm extremely impressed with your knowledge.
Well, thank you. I've been around a long time, let's just put it that way.
Well, it really was helpful to have someone to step into a position who just took the ball and ran with it, and there was a lot to be done in the short time you were here.
Well,
We
I love
appreciate
this
it.
kind of stuff. It's very interesting to me.
All right, are there any questions, concerns, issues before I entertain a motion to adjourn? If not,
So moved.
Second?
all in favor?
Aye.
Oh, one other thing. With the situation with the coronavirus, please be on the lookout. We have not postponing our meeting for next month, but as situations develop, we'll keep you advised.
That's why.
Thank you.
Thank you.